Hey, all you everyday traders, it has been a bit. We are back. This is Greg Jensen, CEO of Options Animal. As always, friend and partner, Eric Hale. How are you today?
Great. What a lot of the viewers don't realize is that we, as YouTube hosts, are able to see your webcams. And what a good looking bunch of people you are.
Wouldn't that be scary?
You
I
know,
am
I don't know if you,
I
I
am
have a
really
Peloton.
glad that is not true.
I have a Peloton, and my daughters had them before me. And apparently, it used to be that when you went into class, your webcams were on, and you could see other people working out. I just say it's not a really good look to see people sweating their butts off on Peloton. So they don't do that anymore. But yeah, I'm glad that the webcams aren't on. Occasionally, you probably have seen it. Occasionally, we teach a class on Zoom, and one of our students or clients will turn on their webcams. And yeah, no, we can't see you, but we wish we could.
We wish we could. We wish we could. We want to see your faces right now when we talk about no, I'm not going to bring it up. Yeah, we probably will talk about Doge because it's going on.
Yeah.
It's one of the things that's having a big impact on the market right now, to be honest, on an individual basis. But since we talked last, there have been a few market moving events, and what's odd is it's kind of been over the weekend, um, as we've had these weekend sell-offs. 3 weeks ago we had the inauguration, which was volatile. It was also on where we were celebrating President's Day. The week following that, we had a competitive AI product, DeepSeek, that came public. I shouldn't say came public. It's not an IPO, but it
Was
came to the
announced.
public. It was announced as a product and a competitor to really, I guess, to Nvidia, but it's just to the US based AI platforms. And the market just absolutely crushed over the weekend to the downside. Particularly, we were talking about a 10 sigma move that happened in which ETF was it? The
The Van Eck
Semiconductor.
semiconductor.
That's right. The Van
Yeah.
Eck Semiconductor just absolutely destroyed Nvidia and AMD and um, Micron just over the weekend. This again, not this last weekend, but a couple of weekends ago, we had this big drawdown that the market recovered from throughout the week.
Let's back up on the 10 Sigma thing just to put that into perspective. I wanted to talk about some of these other things, but you said 10 Sigma. A Sigma is a standard deviation. And for those of you who took statistics, you remember the bell curve. One standard deviation works out to be 68% of the time it's within that range. And two standard deviations is like 94%, and three standard deviations like 99.5%. Six Sigma is, you might have heard of Six Sigma. It's a quality program. That's like 2.3 failures in a million products that are produced, or a million days. So if you would expect in a million trading days, you'd get two Six Sigma movements. So newsflash, folks, we haven't had a million trading days. And what happened in Van Eck, the ETF, was a 10 Sigma move. And if you try to do a Google search and say, how frequently should I see a 10 Sigma move? You won't find the answer. It's
Yeah,
there if you,
it shouldn't happen.
it's just, it's not, it's like a 100,000 years. So back before, it's like six ice ages ago.
Yeah,
Humans weren't walking on the planet. Um, that's how frequently these sort of moves happen. And if you look at this chart here, you'll see that we do get some of those other really crazy, crazy moves that do happen. And that's a little bit of it matters to us as option traders. This is why Greg and I tend to really frown upon naked option selling, is because you aren't this is the bullet in the Russian roulette. So you don't get paid for that sort of risk that you're taking. And for it to happen on something like an ETF, where some of the moves, any of the hardware, AI hardware, computer manufacturers just took a beating a couple weeks ago. Yeah, pretty brutal. Anyways,
so again, I think part of that, the reaction to that points to me to the fragility of the market. It tells me we're in a bubble. It doesn't tell me the bubble has burst, but you don't see those types of moves in big market cap names like Nvidia's if it's all fundamental investors, if it's all Warren Buffett behind Nvidia right now and the parabolic move that Nvidia has had, then you don't see those kind of moves when you have a competitive product being released over the weekend. That to me is a signal that that we are fragile. This market is very fragile and has downside risk. And when the bubble does finally pop, it's going to be volatile, really volatile to the downside. I don't think it's popped yet. I still think there's plenty of reasons to be bullish. And I'm sure we'll talk a little bit about that. But then over the weekend, last weekend, we had tariffs announced.
Right.
And the market gapped down again. And I saw your tweet over the weekend, right? BTFD.
Buy the dip.
Yeah, buy the dip.
You can figure out what the F means. But that's yeah, and that's you're right. It's interesting because what's kind of strange is we don't have an elevated VIX, but we have a very sensitive market. And today is the 7th of February as we record this episode. We had a very volatile day today. We had a great jobs report. And it was kind of mixed, but unemployment went down, jobs were a little bit better. So there's a little bit of good and bad in there, but overall I thought it was a great jobs report, especially the revisions, the short-term revisions anyways. It's a good jobs report, and the market was okay. I mean, it went up actually a little bit, and then we get the consumer sentiment, and then the market just sold off. And usually, the Michigan Consumer Sentiment Report is not as market moving as the jobs report, and it just makes you sort of scratch your head and wonder, what's going on? Is there something else? Where's the sensitivity coming from? I mean, was the jobs number close enough that it didn't affect anything? But what's your read on that today?
I think the jobs number was close enough that it wasn't something for markets to get bullish about. And maybe they're looking back at, okay, I've seen the pattern the last 3 weekends. Maybe you're supposed to get short over the weekend. So this is some short-term positioning. It's interesting that the bearish move today is not really as broad-based, but it's really the big eight, the big seven. I'm going to say the big eight because I think Broadcom's gotten big enough to be included in the big eight, but everybody's down except for Meta as far as the big guys go. I mean, Tesla, Amazon down 4% on not fantastic earnings. That's maybe
I thought fantastic. I thought their earnings were great. It's their forecast that they said.
Yeah, their forecast. That's right.
Yeah, their guidance was going to be lumpy. Their report I thought was excellent. I'm actually got a short put that's going to get assigned. I've got a bull put, and I'm going to take ownership of Amazon. So,
and maybe it's some of the jitters regarding tariffs. I know there's been some talk today as well about some retaliatory tariffs coming from China that could impact. I know that's one of the things that Apple has struggled with because Apple's got a lot of exposure to China. And I really think the tariff move last weekend, yes, the headline was slapping both Canada and Mexico, our two neighbors and biggest trading partners, into helping with our borders. I believe that's what that was as much as anything. And the agreement came that they were going to help with the borders. But the one with Apple is really the one focused on China. And I think that's still the biggest risk from the tariffs. And so maybe that's it. But I don't know. I also think there's a lot of things to look at in the market to still be really bullish about. I mean, the software space around AI is going bananas still to the upside.
Yeah, so you talked about DeepSeek and that the market reaction to that was very bearish. Is that overall a bearish or a bullish thing to you?
I personally think it's a bullish thing to have another competitor in the space. I think it gives more stability to the long-term part of the economy. When you get Nvidia owning the space, I think that exposes all kinds of risks for corruption and not being as efficient as the market could be, as the economy could be. When you just have one company kind of running the show. I mean, if you looked at, and I pointed this out with Google's earnings this week, that Google's earnings show this huge increase in CapEx from last year to this year. They're planning on just spending a ton of money. And you know that is a little bit reminiscent of past bubbles when you have the big guys who are out there spending a lot of money. Google's given Nvidia a lot of money right now, and Microsoft is giving Nvidia a lot of money right now, and Amazon and so forth as they build out these data centers. And it's not necessarily a bad thing. It does drive GDP, but when you have a company like DeepSeek come in and say, "Hey, we can compete as well," I think it makes the space deeper. Not to use the same term, deep, but it actually helps the economy. So I wasn't in the short term bearish about it, but what it pointed out to me was what I had said before: is this market's really fragile right now for it to react how it did to that announcement, because I thought it was way overblown.
You know,
It,
the hypothesis is that AI, the features that we have, which by the way are incredibly powerful, it is going to change everything. I've seen some major shifts in my life, and people just sort of take things, you know, and just go with it, and not realize how. Just think about what you have in your hand, you know, the iPhone that we carry around, and just I mean, I remember watching Star Trek saying that'd be really cool if you could just hold something in your hand and talk to people like, without, you know, not being in, you know, when we had a wireless phone in our house in like, I don't know, 1979 or something, we were the coolest people in the street, never mind cell phone technology. And just to what we can do today, I think people just take it for granted. And we're going to all take AI for granted. And the next thing that's happening is already happening
did
already.
it have one of the little antennas that you would pull out of it?
It did, yes.
Yeah.
It was beige. Yeah, yeah, yeah. Yeah. Um, you probably fried your brain too with EMF.
I'm sure.
I
I'm
don't know.
sure.
I don't know. How about the
Sorry, I threw you off.
no, that's okay. Anyways, I mean, just the next wave of AI. I use the chatbots all the time. It's just I ask it for the you know, I'm going to the Bahamas, and I had some questions about scuba diving, and I just put it in there, and man, it gave me I've got 7 hours to kill between my I got a connecting flight that goes to Nassau, and then I've got another flight that departs in 7 hours. And it created an itinerary, even where I need to have lunch. Where my wife and I are going to go. There's a historical tour, a walking tour that we can. Gave me the phone numbers, gave me the reviews. Everything. It's just it just that's just one application. I mean, I don't know if you use it like I do, but it's amazing. And the next wave of AI is agentic AI, and that's agents. So agents are things that people that do things, and so not only it's just going to know AI is just going to know what you want it to do, and it's just going to do it for you. And I feel a little bit uncomfortable about things like that, but I can imagine like you know, think of Amazon, you know, how they're going to integrate that into reordering things. And they try really hard to try to get me to reorder things with subscriptions. But the point that I'm making here is in order to get to agentic AI, you need more power, you need more computing. And then the next thing after that is AGI, which is essentially when computers are smarter than us. And I think everybody here, you know, high degree of probability, 98% of you are all going to see this AGI happening. And the limitation is computing power. What happened with DeepSeek, allegedly, is from what I understand, is that they've created an algorithm that is a much more efficient, that it doesn't need the biggest and the best computer chips. That doesn't mean that we're just going to stop and say, oh,
Right.
yeah, we're not going to, oh, Nvidia doesn't need to sell chips anymore. There's two or three levels of AI that still need to progress, that still need those faster chips. And it's actually what we just saw is, if anything, it pushed us, it accelerated us much closer to whatever this future is going to be with AI that we're all going to take for granted. I mean, it's just gonna happen. And I've been talking to my wife about like, you know, what would we get a robot to do? We decided to pick up the poops in the backyard from the dog. That's a feature we definitely want to.
That is a great idea. That is a
Well,
great idea.
honestly, I don't. Was it gonna put away the dishes? I don't know. I don't know. But my wife and I've been debating every now and then. Like, what would it do? It's like, it'd be cool if it would pick up the poops and we didn't have to do that. So
I would say walk the dog, but I enjoy walking the dog.
that's
That's
what I said. She said we could walk the dog. So, well, we don't, but here's the other thing. I got a father who's 85 years old and lives on his own and occasionally leaves the stove on. So I think having an optimist for him would be a really, and if he fell, could help him get up. I think elder care is, I think there's real interesting niches, but yeah, we're getting a little bit off track here. But the deep freak due to deep seek is overblown. I don't think it's going to impact Nvidia. There still is. I mean, there's just. It's not like we are hitting a limit on what we can do. The limit is still going to be computers. It's just the next two or three things that were going to happen in AI are just going to happen sooner, and that's what's already happening. I use Perplexity. Perplexity has, because the deep seek model is open source, Perplexity's taken it and just put it right into Perplexity. So I'm using DeepSeek in Perplexity. You can pick which model you want to use. I mean, I can't hardly tell what the difference is. It seems to work pretty well though. So, and the big promise I think is, if you're focusing on just Nvidia selling more chips, the big deal about AI, it is going to be what it's going to do the overall productivity of the country, of the economy, that it is going to make people much more effective. And it does have some interesting impacts. So economists, we're not economists. You're economist, right? But we don't.
yeah, I got it. I got a degree in economics, but
Okay, there you go.
I don't
So
know if I'd call myself an economist. But
how do things happen? It's weird with economics because we get tipping points, and one of the scary tipping points with efficiency is that a lot of people don't need their jobs, and so what do we do? And this has always been a problem. And people who are short-sighted can't see past, somebody who does, bookkeeping. And this is a real thing. When Excel spreadsheets came out, and you probably remember the day of people keeping ledgers by hand and those sort of greenish sort of pages with lines. And I knew bookkeepers, and they did it click, click, click. And a lot of those people lost their jobs because we could put it all in Excel. Bank tellers lost their jobs, and you go. This all goes all the way back to General Ludd protesting the mechanical loom because people used to weave, and this was going to be the end of the country because we now have mechanical looms, and these people, and take it forward to the cotton gin, which I know there's some sensitive racial things that I'm being insensitive to that. I understand that, but the cotton gin did do the work of 50 people, had some profound impacts, and I'm not short selling short the impact that it has to people today. It's going to be painful, but we look at the jobs that we have now. I mean, just somebody who's doing AI programming or social media manager, a search engine optimization engineer. These are jobs that we couldn't imagine 10 years ago. We didn't even know that. Maybe, I guess, Meta's been around for 17 years, but Facebook, but a lot of there will be new jobs for people, and there will be people who are displaced. But overall, it's going to be a boom for the economy. It's going to be good for the economy. Buggy whip manufacturers, nobody's complaining about buggy whip or candlestick makers. All of those jobs are gone due to technology, and a lot of the jobs that are happening today. But overall, you look at what's happened with the economy. So that's why I'm very bullish about DeepSeek. I think it just only proves that there's more room for optimization, and we're just going to get there faster.
yeah, I think the market overreacted to the DeepSeek news as well. I think the news that's going on right now that the market is not reacting to, and maybe that's what today's move, again, this is the 7th February. Maybe today's move to the downside, the market is maybe starting to price a little bit in of what Doge is actually doing.
Doge. Now,
I
what's Doge? Is that a meme coin or something?
I started our recording off with that term, and obviously,
Explain what it is, Greg.
the Department of Governmental Efficiency, headed by Elon Musk, under the Trump administration, is making a splash. They're making headlines, and they started specifically with probably one of the places where the most fraud was occurring. I don't know, maybe not the most fraud, maybe just the easiest to expose fraud that was going on. And that was in the US aid department. And the announcement that I read yesterday is that there were 10,000 employees in this US aid department of the US government. and that they are letting them all go except for like 200. I mean, it's like a 98% of the staff are being terminated in this department of the government. And it's Marco Rubio is the one heading it now. And so it's going to have an impact on a couple of things. And the thing that I'm going back to is how don't get me wrong. I'm all on board for this to happen. This is something, in my opinion, Eric, you and I share, I believe, similar political beliefs. We're very conservative, not from a republic. I'm an independent. Let's put it that way. I'm a libertarian.
My voting shows that I'm an independent. I'll say that. My voting
Mine
record
does
does.
as well.
But you and I both tend to lean, definitely libertarian. So,
Yes.
and so my general philosophy is, don't hurt other people and don't take their stuff. So
I
that's,
believe our government has gotten way too bloated,
yeah,
and it is huge and inefficient and fraudulent. And so I'm on board for what's happening. The risk, however, from the status quo is that our current GDP that we rely on to say that we're in a growth phase and that we're not in a recession is part of that component is government spending. In fact, 33% of it last year was government spending. So the GDP formula, for those of you who are not on economists, is consumption, C, plus investment, I, plus government spending, G, plus net exports, which is NX. And net exports is going to get impacted by tariffs.
right.
That's going to have a drag on GDP. Government spending, we're cutting right now. And consumption, which is the biggest component of GDP, but if all of a sudden we lay off how many hundreds of thousands of government employees that are going to get laid off in this effort, they're not going to get rehired in another government agency. I don't think that's the point of what Doge is doing, is they're not just shuffling someone from USAID over
Right.
to the Department of Education or to Social Security Administration. They're planning on trimming down the excess spending to try to bring our national deficit back into a normal realm. And if we do that, it's going to have an impact on GDP. It will put us in a technical recession when that happens. It's just how fast it happens. That's going to be the big unknown with Doge, is how fast they get this stuff done. And obviously, we're only in week 3 of this new administration, and they're already blazing down the trail with a lot of the things that they're doing. So I don't know. Maybe that's why the market's getting a little jittery right now, is pricing in the risk of an economic slowdown based on just tightening our belts as a government and not having all of this excess slush that's going to be given out there. And we'll actually be able to, I don't know. I would not have guessed after today's jobs report that we'd be down 1.5% on the NASDAQ. So, and I don't think it's deep seek. I think the investment community has realized, okay, maybe we overreacted.
Sorry, I had a conflict with the meeting. It's okay.
Nah, you're good. So,
No, but listen, I wanted to, throw some stuff out there, and I try to be open-minded and be willing to change my mind. I had this discussion with somebody yesterday about people who change their minds on things. So I try to keep open-minded. Muhammad Al-Arian said one of the smartest things I ever heard was that Muhammad Al-Arian, one of the smartest people in the world, says, I believe in things that are wrong. I know that I believe things. I have strongly held beliefs that I know are wrong, and I should celebrate changing my mind. And I think it's a great mantra for people to have. And one of them was, sort of blew my mind. I remember back when we were forming TSA, I was doing some work with Siemens at the time. They were one of the big bidders on the TSA equipment that we all go through. Do you remember the day we used to be able to just walk right up to the gate
I do.
with those tickets that had like red ink on them, no driver's license, no nothing. You could get on a plane with somebody else's ticket. As long as you had a ticket, you were good, and no security, nothing. And it's changed quite a bit these days. But one of the criteria, which blew my mind, was the number of jobs that would be created to maintain the equipment. So this wasn't about, I'm all about efficiency. And I'm thinking it would be a bad thing if you say, here's this piece of equipment and it requires, 20 people to support it. That one requires 5 people. Me, I'd be like, well, let's get the one that takes 5 people. No, they wanted the one that takes more people. That's the government. And Harry Reid, I remember, God bless his soul, at the time was talking about the number of jobs that were going to be created. And I'm thinking, like, none of these, well, there's question about whether TSA adds value or not. So, and if it's worthwhile, that's a debate that's open. I don't want we go down that path, but there's a whole school of thought that that believes very Keynesian sort of mindset that spending, government jobs is what creates stimulus in the economy. And that I tend to align more with the Austrian school of thought, the Hayek sort of thinking, or my um, Mises. I'm a member of the
Yeah.
Mises Institute, and I actually a benefactor for the Cato Institute. So I I lean a little bit on the smaller government side of thing, and I'm willing to keep my to be convinced. And the pendulum is most definitely swinging. There's no question. And what scares me a little bit is we might be in this term that that they're using now as FAFO. So F around and find out. We're really shaking some stuff up and rattling some cages, and
It really is. It really is an unknown. I mean, I know for a long time there's been the biggest fraud. Again, I don't know because I'm not there, but what I've read in my own studies is some of the biggest fraud that exists is in the benefits side, not just the defined benefits, things like Social Security, but maybe more importantly, the Medicaid and Medicare side of our government spending, which is a huge component of our government spending. And again, not saying that that doesn't have to be fixed. We should fix it. It's on an unsustainable path. I think everyone who looks at our debt, parabola that's just going straight to the upside right now, as a country, realizes this is not sustainable long term. And one of those big things that has to change is our expenditures in Medicare, Medicaid, Social Security, and defense spending and everything. They all need to be looked at if we're going to have a sustainable long-term budget. But what is that going to do in the short term to GDP? What's it going to do in the short term to jobs? That's the unknown to me. Maybe it doesn't do anything. Maybe I
listen.
don't know that we know. I have a hard time. There's a guy that I follow on Twitter, Andy Constant, at Damped Spring. He's an economist as well. I think he actually runs a macro company now. Does some consulting as well. Kind of was doing the same math yesterday. He's like, I can't make the math work. If we drop our deficit from 7 trillion to 4 trillion or excuse me, 7 trillion to 3 trillion. So if we drop our deficit by $4 trillion in 4 years, it's like, I don't know how you make the math work of keeping the GDP above zero. We will go into recession if we do that. The question is it the right thing to do? Do we as an economy need to say, yeah, I'm okay saying let's go into recession, let's tighten things, let's go through some rough periods for a little bit, maybe hope that things like AI and robotics can help us be more efficient so that we can still potentially get some growth in the economy without having too much pain in the markets in the meantime, so that we can get ourselves on a sustainable path, because the parabolic move of the U.S. debt is not sustainable. I think everyone agrees with that.
Well, go back to the government spending thing. I remember, my mother worked for a government agency, and at the end of the year, they'd be buying new office furniture and all kinds of other things that would and I remember my mom explaining to me, well, if we don't spend the money this year, we'll lose it next year. So whatever you spent, most government agencies that have a system that works like, well, what did you spend last year? Okay, we'll add, whatever, 2%, 5%, whatever the number is next year. And so there's this mindset, and I've seen it other places. Well, we've got to spend the money or we're going to lose it. And businesses that are smart have switched to zero based. So your budget next year is zero. You have nothing. So what do you need? How much money? What are your plans? What are you going to spend? And I think if it was your money, if you were the person with the purse strings, and by the way, this is everybody listening, is if you're paying U.S. taxes, it is your money.
Yeah.
You would want them to be prudent about not just, well, we spent 100 million next year, we're going to spend 102 next, the following year, just because that's and this, oh, we don't want to lose the money. So if you could rationalize, here's our expenses, we got this payroll, we want to do these projects, these capital and spend improvements, et cetera. So it's not necessarily fraud, it's just the mindset of that people having jobs, and there is this mindset among some economists that the government spending does contribute to the GDP. So I'd be really interested to see, as you said, I fear the same thing, that this, we might screw up, well, we might impact GDP. And if we get a couple negative quarters, we're in a recession.
And as long as, companies that drive S&P earnings are not going to be impacted as much, then I think the recession can be mild. As long as we can keep growth. I think if we can keep energy prices going down, it's nice to see oil down at $70. It's nice to see, for the most part, inflation stabilizing. Although that's, I think, the portion of the consumer sentiment report that came out today that kind of freaked people out, is that the expectations for consumer sentiment is that inflation is going to get back up into the 4% range.
Now, that's asking people like you and me.
I know that's, I've always thought that. How is that legitimate? I mean, even asking people like you and me might be a better explanation. I mean, quite honestly, it's asking the
Yeah,
bartender
but
from Simpsons
exactly.
in,
Yeah, the 500 random people get a phone call and say, "What do you think? Our rate's going to go up?" I don't know. Nick Timmerose had an excellent post because they also ask your political party, and the skew is very clear. If you're Republican or you're independent, you think inflation's going down. The massive spike are all Democrats. And I'm not trying to be political here, but Nick shared this on Twitter and said yes, that's what making it move. But there's this political split, of somebody's either completely bad or completely good, and everything Trump does is going to be bad and bad for the economy. And certainly that's the narrative that we're hearing on the mainstream media. That's what you're reading in the paper. And let's face it, the media tends to skew a little bit to the left, and I think even people on the left realize that's true. And so there is a definite bias in those numbers. But I was trying to pull up this chart because I saw it earlier today. And this is the NFIB Small Business Survey, capital spending, which that's jaw dropping. As since the election, the plans for small businesses to spend capital to invest has skyrocketed. And this goes to another very important thing that affects businesses. And any rational person would have to agree with this. Uncertainty causes people not to spend money. It's uncertainty is the worst thing in the market. And that's maybe, I think uncertainty is what we're seeing the jitters, because people are just not really sure that it doesn't fit into what they know or what they're sure of. I think people should go back to this one thing too. I keep telling people, when you get confused, just make sure you know what you know. And I'll tell you what I know is we have a president who rolls out of bed every morning and looks at the S&P 500 futures. I think before his feet hit the floor, I'm it's going to be one of the first things he looks at in the morning is, where are the futures? And he knows that he can make those futures go down. He knows he can make them go up. So I'm telling everybody, if he's the reason, this is why when the tariff stuff was hitting the fan, I was buy the F and dip, because if he's the reason it's going down, he's gonna 4 years from now or whenever, some point, he's gonna look at the S&P 500. I did that. It's what he's going to say. So there's going to be volatility. It's going to go up and down. But I think maybe you don't agree with me on this. It's one thing I think I know is that he is not going to try to trash the economy or trash the market. And maybe I'm willing to be changed, have my mind changed on that. But along the
I
same
I
vein,
think I no, I agree with you 100%, Eric. Maybe 100% is the wrong word. The only exception I might bring up is what I um, proposed just a little bit ago, is that maybe he's okay to say, hey, let's take our medicine right now as a country, as an economy.
mm,
Let's go into recession to stop the government spending chaos. Let's let's tighten our belts. Let's get rid of all the garbage that's been going on. I mean, some of the reports
okay,
that you read are just it makes you furious as a taxpayer, to be honest. I see a lot of people right now furious as they're reading some of these reports that are coming out of Doge of what money was being spent on.
yeah,
And they're like, I'm not paying my taxes anymore. Why should I pay my taxes on now? Don't I'm not suggesting don't pay your taxes, folks. You'll end up in prison. Don't do that. But um,
I did. I'm not sure exactly. I mean, some of this USAID money definitely was for good causes to do good things. I don't think it was all bad. I think people are really shocked about, didn't realize that, we're paying media outlets. Media outlets are getting paid big money through USAID for uh for
we
what?
we paid for actors and celebrities to fly to Ukraine to meet with President Zelensky to help increase his likability here in the US public.
Is that what
USA
Sean?
paid
Is that
for
what
that.
did that pay for Sean? Is that why Sean Penn was there?
Yeah, that's why Ben Stiller went there. That's why I mean there was a whole bunch of people that went to
Uh,
anyway, again, I don't want to get
it's
political
a,
with this. And
well, I don't disagree that some of that was wasteful, but I'm sure some of it was for good purposes. I mean, hopefully we don't throw the question I have is, are we throwing the baby out with the bathwater? So there's USAID had some, it wasn't all bad. And I would bet it probably most of it was good. So I'm a little bit concerned about what's going to happen there. And I am you know, rather see us spending our money here domestically. But anyways, there is a bunch of this. It's very much in the FAA, FO, F around and find out situation. So they're shaking some stuff up. But one thing I wanted to talk to you, which was an epiphany that I had, or just sort of a realize that just happened in the past like 24 hours, is I don't know if you've caught this sentiment shift between Bassett and Trump and the messaging regarding the Federal Reserve policy and what they're actually
yes.
what they're focused on now. And it is not Federal Reserve monetary policy per se. It's the 10-year,
No, it's using the bond market.
it's the bond market.
Yeah.
And it's interesting. We've seen a pretty dramatic shift. I was going to show you my favorite chart to look at. This the 10-year Treasury minus the 3-year Treasury. So this is
The 3 month.
3-month Treasury. I'm sorry. Yeah, a lot of people look at the 2-year. I think there's reasons to look at both, but most people don't look at the 3-month because the textbooks, we didn't have a 3-month Treasury for a long time. So most textbooks say 10 and 2, and economics takes a long time to change. The 10 and 3 is a lot more responsive. And if you take a look at this sucker, we are we are 0.1%. All we need is a 0.1% move, a half a 0.05% move on the 10 and the 3, and we're back at zero, which is an inversion. And the fear, here was the narrative is when this inverts, when it goes below zero, we have a recession. And so we had the longest inversion we've had in history and no recession. And so the narrative sort of changed and said, well, it's not actually the inversion that causes the recession, it's the rise back above that causes the recession. Okay, maybe. So I guess I want to see it go back down then if that's the case. But this is very interesting to hear this sort of change in narrative from the Treasury Secretary, and the president's on board too. And I think this is going to give a lot of air cover to the Fed to hold rates where they are. And what's
Yeah,
blowing
and
my mind
I'm
is,
actually glad that that's there because I think there was political pressure obviously being put on initially when President Trump was taking office. Well, probably between the time when he was elected and when he took office is when he was the most vocal about wanting rates down and needing rate cuts, and he wants rates low. And you and I both have the same belief that that was going to cause inflation to respike again if we did that. I,
I
I
don't know if you
still I still think that's a risk, but
And so this is big. This is a tectonic sort of move that's happened here today. So June 25th, this is the CME Fed futures, and each one of these is the next Fed meeting. So the next Fed meeting is March 19th, and then May 7th, and then June 18th. And the way that I use this is I go to so the current Fed target rate is 4.25 to 4.5, so 425 basis points to 450 basis points. That's this bar here. Yesterday, this had a 35.4% probability. So this was the first month, and it still is the first month where we expect a rate cut. So right now, if you look at this data, no rate cut expected here, no rate cut expected here. But yesterday, there was a 35% chance that we're at this number. And just what's happened this morning, I've been watching this today. This has been creeping up as we go. And before the market closes, it might get to 50%, which means now we're talking July. So there is definitely a shift that the market is realizing we may not be cutting
I'm pretty sure
rates.
you have a bet out there with is it Horace that took the bet or
Yeah,
Charm?
Horace, the bet is that we raise rates. And there's a very little chance. This is the probabilities.
Well, but the bet was if I'm going to be your advocate here, I'm going to have your back. The bet wasn't that they would raise rates this year. The bet was is the next move by the Fed would be raising rates.
Yes, that is the bet.
So maybe it doesn't happen. Maybe they do nothing all year
Yeah.
and we raise rates next year.
I think what we've talked about with inflation. So, folks, the Fed funds rate provides money to institutions, to banks. It directly impacts loans, and if rates are lower, people spend more money. The Fed can put their foot on the accelerator to speed up the economy by making money cheaper. And if they make money more expensive, ostensibly things slow down. And what's happened is the opposite has happened. The opposite has actually happened. We've had the rates going down, and we've seen the 10-year Treasury had gone up, and it's come back now. It's flip flopped. This is the 10-year Treasury, but this is when the rates all this time through here, the rates have been getting cut, and you would expect the 10-year Treasury to be going down with it. And this is mortgage prices are going up. Like this is the Fed's cutting rates and mortgage prices are going up. And if you're confused, then that's good because everybody's confused. And maybe there's some other narrative, somebody who's smart. Maybe Greg, maybe you're smarter than me and you can explain it to me. But if the Fed is cutting rates, interest rates should be going down. Now, I do know that there's fear about the 10-year could reflect other things. Like people could be thinking about where inflation is going to be long term, and maybe we have a recession. That's it could be one or the other that could be driving the sentiment on the 10-year too as well. So I do know that's out there, but it's sort of got people scratching their head as to why mortgage rates aren't going down when the Fed's cutting.
It's a conundrum. You're right. It's not supposed to happen. It would be interesting. And I'm not a bond expert. I do know that I'm a little bit of the same opinion of Michael Green, that I believe portfolio theory right now, a lot of the stuff that worked in the past doesn't work anymore because everything is driven by passive investing. I don't know if that's the case here. But I do know that there are huge portfolios at Vanguard, at State Street, the big, huge mutual fund companies that when we're a fully employed economy and we're all making contributions to our 401ks that have a 60-40 split, and we've got to those portfolio managers have to maintain a balance of 60-40. And when you have outsized moves, like especially like we had in the bond market last year, or the last 2 years really, that it sometimes forces the hands of portfolio managers to do something the opposite of what you think may happen because they have to maintain their 60-40 balance. Is that the case? Maybe. Like I say, I don't know. I don't know. I haven't really, I'm not a bond guy, so I can't really say that that's 100% what's going on. But I do know I think it's one of the reasons why you see when the market gets really driven by to the upside sometimes, and it's driven by the big seven, big eight companies, it's simply portfolio balancing that's going on of everybody got their paychecks and there was a bunch of money deposited into State Street that automatically went into a fund that a portfolio manager is sitting there going, okay, I got $100 million I got to put to work this week. So I'm buying the S&P 500 in equal portion, which means I'm buying Nvidia, I'm buying Apple, I'm buying Microsoft, so on. And there's just a lot of passive money that is still in this market. And the passive money is stable, it's good for the market. But when it makes a decision that there's enough fear, that's what I think will eventually cause the bubble to pop. And whether that's recessions that cause it, whether it's job layoffs, something causes the fear to spike, but I don't see it yet. That's why I think
Well, we've
you're
seen
right.
it in our businesses too, right? So the zeitgeist has definitely changed. The urgency to get into the market. And you mentioned it earlier too. What were you talking about? Retail capital flow.
I did see a report yesterday. I haven't been able to find it again, so I hated to. I'll just say what it was, but I won't quote the exact numbers. But that we are at the highest levels of retail exposure to the S&P 500 that we've ever had. We just surpassed not only the exposure just previous to COVID, which was almost a record, but the record was back in the internet bubble days of the retail exposure to stocks. And so there's a lot of retailers that are in the market right now, and they want to be in the market right now. And
Now clarify, is that bullish or bearish, Greg?
in the short term, it's very bullish.
Okay.
It does potentially set up extremes. You know, the crowd is right in the middle of trends. They get wrong at extremes. They get wrong at tops and they get wrong at bottoms. So I don't see the extreme euphoria just yet, at least not in the equity market. Maybe in the crypto market, you could say we're starting to get some extreme euphoria. I think fart coin is a perfect example of that one.
You're not a fan of
Did
Farcoin?
you see the Enron coin a couple of days ago?
I thought that was a joke. Is that real?
It was real. They rug pulled it, and somebody is probably going to go to prison over. Ironically, the second time someone will go to prison over a company named Enron. Um, but I think you're seeing some euphoria there, but I don't see it in the stock market right now necessarily. Even though we're really highly exposed to the market from as a retail investors, I don't see this idea of I, I I got to have everything in the market right now. In fact, you know, you're pointing out another report that's actually showing another thing I think that's bullish with
Oh,
this AAII.
yeah. So the American I'm sharing my screen right now. Okay, good.
You are sharing your screen, yeah.
Okay. So this is bullish because people are bearish. So last week we had 41% of all these are American Association of Individual Investors are you, me, everybody. You can participate in this survey seriously. And so last week, 41% of an individual investors were bullish, and this week 33. So this is just since it's updated on Thursday, so or I guess Wednesday. I guess at the end of the day Wednesday, and bearishness jumped up by roughly 10%. This is a good thing. When we're at these extremes with low bullishness and high bearishness, those are buying opportunities. So I think that coupled with the stuff that I was looking through my database because I thought it was Bank of America yesterday that did something that quoted that report. So I don't know if that's where you saw it, but I saw a Bank of America report yesterday about the peak capital flows, and then also went back and they had some explanation as to why that is not necessarily bearish. And so, yeah, I think we have still plenty of room to grow in this market, and I still maintain my bullish stance. I do think that we're going to have a little bit of a different market than last year. Hopefully, well, I, I don't think it's going to be the Mag 7 this year. We're not going to get it all from seven stocks. And I do think that maybe, I don't know if you're reading this, that it might be time to start taking a look at Europe. It's been so awful for so long that Europe seems to be getting on the radar as maybe a place to look to invest. But there's another idea. I haven't figured out how to invest that. There's the stock 600. I don't know if it's the burst or something. I'm not sure which equities to invest in there. I need to do more work. I'm not smart enough to know where to invest in Europe yet. But back to the Fartcoin, Enron, Dogecoin, a stock that has made it onto my watch list is DraftKings. And we've got the Super Bowl coming up in a couple weeks. DraftKings has earnings coming up in a bit here, and this degenerate society that will bet on anything. And we've got Texas now might have legalized sports betting. I think it's either between DraftKings or Flutter. So Flutter is a UK based company, but listed in the New York Stock Exchange, and they own FanDuel. So the two are kind of neck and neck for who's number one. DraftKings has been growing more. Flutter has more users, but DraftKings has been growing at a faster rate. So it's an equity that I'm looking at potentially. I was going to do a trade this week. I just didn't get around to pulling it off. The trade that I did actually was Uber today. So, and I did my George Costanza trade. So
Uber's having a nice move today on the back of Bill Ackman taking a big,
great
right?
earnings, and then Bill
Yeah.
Ackman putting in $2.3 billion was disclosed. And yeah, I think I was looking at the dealer gamma. I think there's a potential that we hit a wall around 80 and maybe it reverses. So I'd be willing to buy the stock if it goes higher. Goldman Sachs has a price target that a 12-month price target that's like 50% higher than, or no, thinks, yeah, 50% higher than where it is right now. So Uber's one I'm bullish on. DraftKings, we'll see.
So who do you so let's end it on this. Because who do you got this weekend for the Super Bowl?
This weekend is, oh, it is this weekend, isn't it?
It is,
Is it this Sunday already?
right?
Yeah, Super Bowl this Sunday.
Or it's not next weekend. It's this weekend. Super Bowl 2025, Sunday, February 9th. It's in 2 days.
That's in 2 days. Yeah. Okay.
Chiefs or Eagles?
The Taylor Swift team.
The Taylor Swift team.
So my wife says, is the Taylor Swift team in the Super Bowl again?
They are.
Yes, honey. The Taylor Swift team is in the Super Bowl. That would be the Kansas City Chiefs.
You know, Andy Reid is hard to bet against. It's interesting having him go up against his former team. Remember he was the coach of the Eagles forever and ever. So the Eagles know Andy Reid. So we'll see how it goes. I'm gonna take the Eagles. I actually like the kid they've got running the ball. Why did I just lose his name?
Did you see the meme of who's voting for which there's a map of America that's which team does America want? And it had this little red dot in Kansas City and it had a green dot in Philly. And then the rest of the America was meteor strike.
Meteor strike. Barkley. There we go. Saquon Barkley.
Saquon Barkley.
That
Yeah.
kid is
Ohio State. Wasn't he? Was he Ohio State?
He's impressive. I believe he was Ohio State. No, Penn State.
Penn State.
He was Penn State.
Oh, here it is. Let me share. So there we go. Kansas City Chiefs, Philadelphia Eagles, meteor strike.
Meteor strike.
I'm not terribly excited about what's happening Super Bowl Sunday. I am delivering a lasagna for Lasagna Love this weekend. I guess I got to factor that in because we will watch the Super Bowl. Lasagna Love is an organization that I volunteer for. They make meals for people who need it. They're across America. If you know anybody who needs a meal or you'd like to cook, check it out. This is not a paid endorsement or anything, but lasagnalove.org. And we, you and I talked ahead of time, and we had a whole different list of things to talk about. Or we had a bunch of other things to talk about. And man, we just had a great show, I think.
We did. We had a good one. So let's do another one early next week. We'll
Okay.
actually talk about the things we were going to talk about.
Yeah. So we were going to dive a little bit deeper into the covered call. I had a conversation over the past 24 hours with Ben Eifert, who's a chief investment officer for an options company, talking about covered calls, and maybe we can have a healthy debate on whether covered calls are something that should be in your portfolio or not.
Absolutely. Let's do it.
All right, my friend, have a good weekend. Go Super
Yep, you
Bowl.
too. Thanks, everybody.
All right, we'll see you later.